Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Corn futures has been moving up very nicely all of January. We can see here from the movement that we're seeing that the strength continues. Price is currently up against resistance near 368 3/4, and right now this resistance is going to be very key to the market. As we approach here, we have been overbought for quite some time, but if this market's able to continue to remain in an overbought position, a break above 375 would truly be a great indication of potential strength. Upon breaking 375, and if the market moves higher and finds resistance, comes back in and then turns back up near the support/resistance area, then all bets are off with regard to the market just simply moving sideways, which would put us in position to really see a nice move to the upside as far as corn is concerned. The key levels to look for this coming week would be the 368 3/4 as well as 375. And as the market moves here, should we see a bit of a correction over the next 2 days, look for support to come in near 356 3/4. Last week, we highlighted that 369 was going to be key resistance, and as you can see that the last 3 times that this level was tested with this market, the market did react and has turned down from that level. We continue to like 369 as potential key resistance, but upon breaking above it, that's where we could look to find some strength. Additionally, you can see how the market today found support against our 1x1 downside red angle. And up ahead, you can see the upside red angle should be major resistance overhead should the market break away and is able to make its way up to that area or to that region. March beans is well positioned for continued strength. We can see a very well-defined flag pattern that has materialized here. And right now it's tracing along our 1x1 downside angle. In the event that this market continues to trace down this angle, we would look for this timeline about early February or late January for a potential turning opportunity where the market could come in and then turn back up and could very well explode to the upside. Alternatively, if the market actually continues to trace as it is doing right now over the next couple of days, and if it remains in an overbought position, the trend would be confirmed as a strong uptrend, at which point we can expect a move out of the other side that would mirror what we've seen coming into this move. So over the next couple of days are going to be key as far as how this market reacts potentially at this flag, and we could be looking at a very big move to the upside should this market find some strength. We like support near 1053, which coincides with our 1054, 1 standard deviation above the point of control. So this level continues to be an area that is very important to watch, as we've mentioned it several times now in our newsletter. Last week, we mentioned that as the market approached our end band of the volatility-based resistance area, that we would expect the market to either move sideways to down for about 5 to 6 trading days. This flag pattern actually materialized in conjunction with that volatility-based resistance area. And so now what we're looking at again, as mentioned before, is the potential for the market to turn back up if we're able to hold key support. Wheat futures continues to produce a very compelling price action. One of the measurements that we took was the initial impulse move that occurred in late November through December. Measuring that initial impulse move, if we were to multiply that length by a Fibonacci factor of 1.618, it lands us at 437 3/4, which is pretty much exactly where the market topped off at. This tells us that we have the potential for an Elliott wave movement after this initial correction since we made a higher low, which means that we're sitting at potentially wave 1, wave 2, and now a wave 3 that's yet to be confirmed. Because now that it's touched this 437 3/4 number, it could go up as high as 448 1/4, and there's a small potential that it could even get up as high as 465.5. But in the meantime, even if the market were to come in, so long as the market continues to hold above 411.25, what we could be looking at then is a wave 4 that comes in near this area here, which would then propel a final wave 5 that could very well touch that 446 minimum price objective that we talked about in our recent newsletter. Even still, the market now is poised to either to trend sideways to slightly up. As long as 411.25 continues to hold, we very much believe that the potential for wheat to continue higher still exists. We would eventually roll out of this March contract and apply this same analysis to the May and July contracts, but for now the movement is generally going to be the same as we look at these contracts. We do like the way in which the market continues to trace up against this natural 1-by-1 angle, which leads us to believe that mid to early February is potentially where we could look for the market to make a turn and for the market to continue trending sideways to slightly up into this timeline, and at which point this is where we can look to see a very nice correction before the market looks to turn back up again. Crude oil continues to be uneventful, with support sitting at 51.72 and resistance at 56.25. As you can see, the market continues to hold inside of this area, but of particular concern is the fact that the market has taken quite a bit of time now sitting below the halfway mark of that trading range. That tells us that the market is actually prone to potential weakness since it is sitting in the bottom half of that trading range. If the market were to then break out of this area, we're looking for potential support to come in near 48.50. And if the market's able to come into this area, as long as it holds 48.50, we could potentially see another move to the upside. But for now, the market simply is going sideways, and especially the last 3 or 4 trading days, you can see that the trading range has begun to tighten, and there's not much movement here occurring at all with crude oil. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.